Hello, and thank you very much for taking a look at our instructional series on how to use the financial model that comes with the business plan template that you purchased. Foremost, thank you for making your purchase. What I'm going to do through this video is show you exactly how to use this financial model. Even though this is going to be geared towards a restaurant one, whichever template you purchased, it works in the exact same way. So I'm going to start off with this first tab here, and this is your inputs tab. And of all the tabs, this one is the most important because it controls the vast majority of your financial model. I'll start from the top. Here you can include different revenue centers. So you can add up to 10 different revenue streams. Again, for the purposes of this demonstration, this is a restaurant, so we have it segregated as food sales and beverage sales. In regards to adjusting your cost of goods sold, here you would enter in as a function of a dollar. So for every dollar you generate, what amount of that is going to be part of your cost of goods sold? Here, as it relates to being a food sales business, we're going to assume that the underlying food cost is 35 cents per dollar generated. So you'd be left with a gross profit of 65 cents. With beverages, that's a bit of a higher margin item. So we have that set at for every $1 you generate in revenue, 30 cents of that is cost of goods, and 70 cents of that is your gross profit. I'll show you how this is adjusted. Let's just say, hypothetically, let's just say beverage sales are going to be 25 cents per dollar for gross profit. And then I'll put in 75. And as you may have noticed, the dashboard adjusts here because you can see everything you're doing in real time and how it affects everything else right here, which is one of the nicer features of this. Let me go ahead and put it back to 30 cents per dollar as cost of goods sold. And as you can see, this adjusted again. Once you put in your revenue line items, you can move down to the expense category. Here you have your facility costs, general administrative, equipment, insurance, let me just fix that typo, marketing, and your professional fees and licensure. Now, for instance, let's say we're going with a less expensive facility. Instead of it being $75,000 a year, let's say it's going to be $50,000. And as again, you can see that the revenue model changed here. And it also carried throughout every other statement in this. Let me go ahead and put this back to 75,000. Certain percentages, we have it set as a percentage. As for profit and loss statement, you can manually put these in. So let's say instead of 19,000 a year, we'll put it in at 20,000 a year. And next year it'll be 21,000 and 22,000. And you can do the same for your equipment. Let's assume it's going to be a little bit less of an equipment expense. We'll call it 7,500, 7,750, 8,000. And as again, you can see this is automatically adjusting as these changes are made. Insurance costs, let's reduce those down. Let's call that 20,000, 22,000, 23,000. And again, these were set initially as a restaurant percentages. You could again adjust this as needed. Marketing, let's call that 10,000, 11,000, 12,000. And again, you can see these adjustments occurring in real time. Professional fees and licensure, we'll call it 6,000, 6,500, 7,000. And again, you saw everything adjust. And this is where you adjust all your expenses, your operating costs. In regards to your first year revenue, this is broken down yearly. So for instance, right now we have it set at 75,000 for food sales and 26,000 for beverage sales. Let's go ahead and change that to 80,000 and we'll put beverage sales at 30,000. There are a few ways you could do this. Currently it's set at 35% of food sales, but you can manually adjust it. So let's just say every month it'll go up a little bit. 31,000, 31,500, 32,000, 32,500, 33,000, and I'll just put these in quickly just so you get a sense of how this works and how you can make the adjustments. And again, you can. This file can be completely modified specific for your needs. This is just giving you the running head start that you need for putting in your business plan, and we'll call it 36,000. You can also change your food sales manually. So rather than saying I'm increasing it by $20 per month, let's increase it by $200 per month. And if you want to fill something across, you simply highlight it, go to fill, and go to the right. And as you can see, this updated as well. From there, the last thing on here is just your growth rate. So let's change from year 1 to year 2 at 15%. And we'll change it for year 2 to year 3 to 11%. And as you can see, this again updated. And that's pretty much it. there's only one other tab you really need to modify in terms of your statements, and that's the editable tab right here. This is your personnel. Here you can put in the salaries, you can put in the headcount, and out comes this table. So let's say you need a bigger salary than $50,000. We'll change that to $60,000. As you can see that adjusted. If you need to, let's say you're going to be a slightly bigger restaurant, and let's say you need an additional kitchen staff member, you put in 5, and as you can see, this adjusted for you. This is a table that goes into the business plan, and that's your graph here. You can see a breakdown of the percentages of your payroll, and you can add additional positions as necessary. And you can also adjust the increases in payroll each year. So at the moment, it's set at 2%, or excuse me, 3%. Let's change it to 2. And as you can see, this all adjusted accordingly. Revenue overview, nothing to do here. This is all calculated automatically based on your inputs. Use of funds. So for instance, right now we have the assumption being that the restaurant is going to cost $300,000 to build. Let's say you need a little bit more working capital, so we'll adjust your equity amount to $75,000. From there, you can add the $25,000 to the additional working capital, so it'll be $100,000. And this table automatically updated. There is additional space here as well if you want to add in additional line items for things you may need outside of build out, furniture, fixtures, equipment, initial payroll, supplies and inventories. You can adjust this as necessary. You just need to make sure that your total financing line equals this line. And that's pretty straightforward. Your profit and loss statement, this is completely calculated based on the inputs. As you can see, we adjusted facility cost at $75,000. We played around and put general administrative at $20,000, $21,000, $22,000. Same thing for all the other operating expenses, and those are all reflected here. There's nothing you need to do on this page. Cash flow analysis, this is completely automated based on your inputs as well. You can adjust your dividends and your accounts payable here. So right now we have it set at the assumption that you'll be drawing out 60% of your net profit. You can adjust this by simply, instead of saying 60, let's change it to 50. So then you just scroll across, click right, and out comes your adjusted cash flow analysis. Balance sheet, nothing to do here. This is done automatically for you as well. Those expanded profit and loss statements you see at the end of the plan, that's all done here. That's all automatic. Same deal with your cash flow analysis. Nothing needs to be touched. Your loan amortization table. The only two things you need to adjust here, the loan amount is put in automatically, is the term and the interest rate. So let's say interest rates go down quite a bit. Instead of 8.5%, let's call it 7.25%. Your loan amortization table has automatically increased, and that will adjust in all the other statements as well. Your tax assumptions, federal tax rate, state tax rate, personnel tax rate, you can adjust this as necessary. Just simply, change it to, if you want to change it to 21%, that'll automatically adjust, and that adjustment will be reflected here as well. So we're on tax assumptions. Break-even analysis, this is calculated for you automatically as well, nothing to do here. And your business ratios, also calculated automatically. You may have noticed in the beginning, whenever you're talking about yearly growth rate, where we adjusted it from 10 to 15% and then 10 to 11%, that's here. And again, these are all calculated automatically. The only thing that you would have to do on the profit and loss statement, I misspoke for a moment, is just you would have to manually put in your depreciation. And that's due to a fact that it could cause an error if this was automatically calculated. And so we try to keep potentials for error for minimum. So the way this was done, and this was just sort of an an easy calculation, and this is going to adjust based on your business. So we had, $185,000 of asset purchases, which was divided by 10. If you wanted to change this to, say, a longer amortization, say 15 years, in which case I'm just doing this in my head, let's call it $12,000 of depreciation. This is the only line item you have to actually physically change in any of the other statements. And that's it. It's just this one right here. So if you're wondering how to change the depreciation, that's how you do it. And I'll just set it back to the way it was when we first started. And that's essentially it for this video. Certainly I know that we went through this maybe a little bit quickly. If you have any questions, certainly feel free to reach us anytime. We're more than happy to help. Certainly if you're having trouble adjusting things, just shoot us an email or a message and we'll address it accordingly. Thank you very much for taking a look. And in our next video, we'll show you how to put the tables and graphs that you created here into the actual Word document. Thanks again. Take care.